Good morning, guys. Welcome to this Monday, February 3rd, and we got a gap down Monday, don't we? So it's all about tariffs and a high stakes game of chicken, I think. But as we saw Friday, we already started seeing the selling on Friday, going into the close. It started halfway there, like after 1 o'clock or so. Started selling pretty hard, and into the close, a week close, and the option was either they had something sorted out before the end of the weekend, or we're going to see some weakness on Monday. And yeah, well, we got weakness, that's for sure. And that's how we get this whole week started. Uh, News this morning and this week. And Friday we get the employment situation. That's going to be, I think, the big number for the week. We got stuff going on all week. I mean, we have 9:45, we get PMI. 10 o'clock we get ISM and construction spending today. Tomorrow we get factory orders and job opening. Wednesday, PMI composite ISM, some financial reports. Thursday productivity, and then on Friday employment situation. And then we have Fed speakers all over the freaking places this week. Every day we have 2 or 3 Fed speakers saying stuff. So it could be a lot of cross currents going on. But I think the big news is going to be employment situation on Friday. All the other reports are important and probably potentially could move the markets, but that employment situation is going to really be something to watch. However, to get started, I think that today's, though, even if you have news at 9:45 and 10, I think the market is going to be dominated by the cross currents from this tariff fallout, and how that's going to reprice certain stocks is going to be obviously stocks depending on goods transferring between the borders are going to be more sensitive. Tech stocks and software companies and stuff like that, probably not so much. Even though if the general market is just flat out to the downside, it's just everything it gets dragged down. So if you're looking to buy stocks, days like this could be a really good buying opportunity because everything gets dragged with it. But to get started, I mean, we're gonna have to start from the short side. Big gap down like this. If we start seeing a retracement trade going, we're gonna wait for that 6,015 area, this mode, to come out before I start thinking about any attempt to take this higher or recover. We have to get up above that 6,040-45 level before we get back in action again. And I don't think we're going to get there until we get some resolution on this tariff stuff. Now, I know they've been talking about they're talking. I mean, Trump's going to have talks with Trudeau and the Mexican lady, and we'll see, President of Mexico. And if they sort it out, yeah, market's going to just rocket right back up again. If they don't, I mean, this could drag on. This could be a further selling in front of us. So it's all about what happens with these tariffs, and they go into effect on Tuesday, tomorrow, and then probably we'll see further weakness and a lot of cross currents. So I would start from the short side. I would look to sell strength at this point at 59.85s, looking for 59.95s up to that 6,010s for rotations back down. About 6,010s, I would be a little bit less aggressive on getting short against these areas. They're heading into this resistance area. But this is a good area of resistance up here. So if they get up here, those are probably be better spots to get short. But you also have the possibility that they are in a retracement situation at that time. So I would be looking to sell strength. They had to clear that 40 level, 6,040 area up here before I really start thinking about, yeah, we are back in action. But at this point, we are pretty much in a pretty weak spot and looking for further continuation to the downside. So if we get strength, I'm going to be looking to sell strength up to the 85s, 95s, up to the 6,010s. Above this mode, I'm thinking maybe a little bit less aggressive. We may have a retracement trade going on there, but still opportunities for short setups against the 25s, 35s, and the 40s for rotation, 40, 45s here for rotations back down again. So it could be anyone's guess. We may get a nice little relief rally going, and then based on some news, and then they actually turns right back down again. But a gap down like this just have to be if the market if the overnight is an overreaction, which it certainly could be, we may see a retracement trade right back up again. It could very well happen. As long as the tariff threat is out there, I don't think that's going to happen. I think the market's going to maybe reprice itself, can trade back up maybe to the 6,030 to 40s and then stall. Or it's maybe as the even worse situation where they take out support here and they start heading lower. If they looks like they're going to the whole thing trade war kind of starts and they start increasing tariffs and it really starts getting ugly, then I think the market just going to start heading south in a much bigger way. So watch the headlines, pay attention to that. That's going to be I think much of what's going to drive the market for the next few days. But starting off from the short side, looking to sell strength initially against these first three levels, 85s, 95s, up to the 6,010s, about 10 up to the 40s. Pretty good area of resistance here. So definitely look for short setups. Maybe a little bit less aggressive since we may be in a retracement trade. And normally I would be a lot more aggressive in this area because it's a good area of resistance. But once you get past these, start retracing past that 6,010, we may have a pure technical retracement trade, and that would be something you don't necessarily want to stand in front of either. So I would just be looking for short setups all the way up to the 40s in this morning, and then let's see how far I can take it. Just be a little bit kind of less aggressive in this upper area, and let's see how it develops. If it starts heading lower, watch the support area. We are trading. We have an area at here 59.50s. At the 59.15s, and I think if 15s comes out, it's a nice ledge. I think we are in some trouble. So at that point, see if I can scroll this up a little bit. Remember this little move to the downside over here, I believe was the there was a headline causing that this eye rundown. I forget what that was now, but that was like a news event, which that was the DeepSeek. That's what it was. The DeepSeek announcement got the market all riled up. They ran it all the way down here, then bounced it right back up again. Now we've got other stuff going on, and this stuff doesn't go away. The tariffs is going to stay on until we see that they actually lift them or that this whole thing is sorted out. The pressure is going to be to the downside, I believe. And so looking for short setups against, looking to sell strength. If they start heading lower, buying against the 60s, the 38s, down to the 15s here for potential rotation out. These areas could potentially hold. We are in that area of value right now. A lower area of support starts. You have the mode here first, the 59.50. That's more of an attractor. If they take that out, the next one is going to be 59.15. That's going to be the support area down here. And then you have the 58.75s. So I think if they take out the 15s, 59.15s, we are going to be in some trouble. At that point, I can see them testing all the way down here to the 5800, maybe even lower. So it could get pretty ugly. So we'll see. At this point, I would start off on the short side, stay on the short side until I see some real strength and some real resolve. And what really needs to happen is the tariffs situation being sorted out, you know. I think I don't think it's the worst case or not, but if the tariffs comes on and the retaliation doesn't quite happen and they just kind of stay on, I think it's going to be like a wet blanket for a while on the markets until everything gets repriced and realigned again. But we'll see. Right now, to get started, it's a high stakes game of chicken. You just have to watch the cross currents and be careful trading today because that's going to be a lot of back and forth. This is pre-market, right? Look at these bars forming right now. This bar right there is 72 up to the 83, so 11 points. So 11 points bar on the ES. That's quite a doozy to deal with. I mean, I'll trade with a 15 tick, a 20 tick stop, so 5 points, and that's just not enough a day like this. You have to go to 10, maybe 15 points worth of a stop to avoid getting shaken out by just pure volatility. So trade with a lot of caution today. Looking at the bonds and the where is this guy? Bonds and the Nasdaq. The bond market, it didn't have much of a reaction in the overnight. It hasn't really reacted a whole lot there to the upside though. So a little bit of flight to safety is what I think. But the bond market is not reacting with a hissy fit. So that's a good sign. Overall, they have been trading at higher levels. They're still holding above that 115 or below that 115. But watch that 115 area. That comes out, the yield starts coming down. That would be more of a flight to safety. So definitely its pressure is to the upside on the bond market right now, and that's more rotating out of stocks into safety. I think that's where this pressure is coming from. But if they take out the 115s, the next track drop is 116, could be a nice long trade in that dynamic. So watch for that one. But I would trade the bonds from the long side and look to buy weakness, 26s, 20s for rotations back up. If they trade below 20s, take off the long bias, go back a range bound. And for some reason, if they take out the 1406s, lean in on the short side. I think they may take it lower at that point. So that's the bond market. Not a big reaction there at this point, at least yet. Nasdaq, that's the one which is going to be absolutely nutty. Absolutely nutty. So that one is, I mean, we already have a ton of volume in the micro Nasdaq. They traded down here pretty good on Friday. They were down here at the mode at 21.5. Gap down. We have been all the way down to the 20,900s in overnight, and then they're right back up again. So it's almost like a retracement trade is going on here. So that's what I'm saying. I mean, they're still looking to sell strength. At this point, against the 240s, 290s, 370s, up to the 420s. If they close the gap here from Friday, and I believe that's Friday, isn't it? Let's see. Is that Friday's gap? Maybe not. Yeah, no, here's Friday's gap. The 21,530, that's where they closed. That's the low of Friday. So they closed at the 570s. This is the day prior. So they were trading up here pretty good on Friday. Then they had this big sell-off in the afternoon when the terrorist threat became reality. And if they start trading up above these areas, the 370 and the 420s, these two areas of right now resistance, I think there may be a pretty good case for the Nasdaq recovering pretty good. But again, Nasdaq tech stocks probably a little bit less impacted though because they don't necessarily transport goods back and forth. Though they're going to be some sort of impact, but I think the more direct impact is more on goods producers, which actually transfer physical goods back and forth. So Nasdaq may have a nice little recovery setup going. I would not get excited about a long side until it's a head up above that 21,500 level. That's going to be the high volume area. It's an attractor point. If the market gets there, expect weakness all the way up there. Potentially a bounce down after they get there, if they do. If they trade up above it and start retracing past that, I would be back on the long side of this and see if they have far can take it. But Nasdaq, expect a massive amount of volatility. They have been down here, flirting with it, taking out this support edge at 21,140. It's been a pretty good support area. They're right up here. And right now, it feels very much like they're reverse retesting this volume edge right here at the 21,270, 230s, 240s. You see this obvious volume edge right there. They're retesting that one right now. And if they take it out, start retracing, this used to be a pretty good low volume area. Now it's filled out a bit, but it's still an area where they can cross fairly easily. So, and the attractor up is going to be 520. And the support area down here is at 170, 180. So if they start heading below these two support areas, the 160 and the 120s on the Nasdaq, I would just definitely be on the short side of this. So at this point, still looking to sell strength against the 240s, 290s, 370s, maybe up to the 420s for rotations back down again. And it will just be early morning strength. They run it higher, get you all caught on the wrong side of this, and then they hammer it again. Now, just pay attention to the headlines. If you see it start rallying pretty hard, just pay attention to the headlines. It could very well be that something has happened and the market's reacting to it. And then you don't want to be selling or getting short against the strength if they sorted this out. Then you're going to get run over. So just be careful about that. A lot of cross currents, a lot of big bars. These bars on the Nasdaq right now, 213 up to the 247. So that's just freaking 40 points. That's just 45 points. And I trade with a 25-point stop. So that's, as you can tell, this is just absolutely too volatile. You had to go up to that twice that to be on the safe side of this. And trading with even if you increase your stop, there's no reason not to try to find the best trade location you can. So it's trade location is what saves your butt if you're wrong on a trade. But so at this point, look to trade both ES and Nasdaq from the short side. Look to sell strength for rotations back down. Let's see if they what happens after that. And just pay attention to headlines. Oil and gold. I mean, gold, I tell you, the gold has been one of those things which is like a massively difficult one to figure out what it's doing. And looking at gold, the initial reaction was first up and then to the downside in a big way, and then traded all the way down to the 2800s, all the way down there. So it's like, okay, all the way down to this volume edge. We traced the whole area right there, then right back up again. So I mean, you had to figure that this stuff is it's pretty volatile today. So gold, I would have expected the reaction be to the upside, and it's like a safety play. And then so basically looking at the gold right now, I would trade it as a range bound or stay on the long side at this point. We have a pretty good attractor here at the 2850. That's where they run up here at the rollover. And the fact that they reverse retested 2800 and that held, that's a pretty good sign that they're going to hold this area for a bit. So I would stay on the long side of gold. If anything, a range bound, maybe the bias to the upside. Looking to buy weakness, 2840s, the 30s, 25s, down to the 20s. The trade below that London low, take off that long bias and go back, start thinking about the short side of the market. I would not necessarily go back range bound because we are trading in an upper range right now around this attractor. So buying buying weakness here would be just looking to test these outer edges, because right now we have a decent edge here at the 2820s. So between 27 and the 20s, two decent edges to lean against. But if both of them comes out, I would look for a retracement trade all the way down to 28, maybe even lower at that point. So traded range bound, biases to the upside, look to buy weakness. And if they start taking out the 52, 53s here, I would just stay on the long side and see how far they can. They may take another leg higher. So look at gold from the long side of the market this morning. And then finally, oil. A bit of cross current on that one. So the default direction has been to the downside, but with the tariff threat against Canada, well, it changes things a bit. So at that point, definitely will pop to the upside. So I guess we're going to be up in this upper range now. So support is at 72, 72.50. Resistance going to be up here against the 76, 77s. And I think we're going to be in this range right now. So I would trade oil range bound. I don't think that change is going to be really rocketing oil prices. Probably not going to drive them lower either. So I would expect the market to probably stay in this upper range here. So trade oil a range bound right now. Look to buy weakness against the 73.50s, 73s, 72.70s, 72.30s for rotations back up. Maybe even down to that 72s for rotations back up. Look to sell strength 74, 74.20s, 74.50s, 75.20s up to the 76s for rotations back down again. So we are pretty much in the middle of this range. So just traded as a range bound market right now. Below the 73.50s, we may have a little move to the downside. It could be a short in there for you, but I mean, I would still look to buy against support areas. And if they start taking out the 74.50s, we may have a move to the upside. So it could be a long trade in there in short intraday or a small intraday long trade. I would still be looking for shorts against 75.20 and the 76s for rotations back down. So that's how we trade oil, at least to get started. And let's see how this whole thing shapes up as the day session begins, right? So I'm going to wrap it there for now. So good trading, guys, and just be cautious. Today could be one of those really volatile days. So trade with caution, find trade location, and make sure you keep your stops reasonably tight, but not too tight. Alrighty, guys. I'll see you guys back at 11:30 for the next update. Later.